Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 8th of August. All right, now, as we come into a pretty important week, right, with the US CPI numbers Thursday, the US stock market, well, Wall Street closes up, regains ground as US inflation report nears. Now, there's going to be some position squaring up ahead of the US CPI numbers, right? It's very important for the next leg of the US dollar direction, these CPI numbers. So, you know what? Some of the bigger funds and a lot of proprietary traders will be squaring up their positions ahead of these numbers. Now, as far as opportunities go ahead of it, there are a few, but just try and follow the trends, right? The trend is your friend. Now, the CPI, why it's so important is it's a number that can flip the trend, right? Not on its own, but with the data behind it, like the last couple of previous months of CPI numbers. If they follow the trend of the releases, which is weaker, well, the dollar is going to go lower, takes the pressure off the Fed. And that's what it's all about. Now, just looking at the global markets and looking at the daily charts, right? We are at a key level on a number of these instruments. The dollar index trending down, just coming back to test that resistance line. The equity market's still sort of up, right? Overall, the trend is up on these instruments. The NASDAQ being the leading dog there. Gold, well, it's grinding sideways and oil's just sort of drifting higher. With the dollar index coming off, you'd have to expect the euro to be sort of going up. It is 58% of the basket there, and Bitcoin just cruising topside. Now, when you are looking, let me come over to the currencies and just give you a look at this, because like some traders get caught up in what time frame should I be trading? What time frame should I be doing my analysis on? Well, now I use the hourly charts for all my trading sort of activity. And of course, I'll be using the daily charts for identifying the overall trend, right? So looking at the hourly charts. Now, if you just looked at the hourly charts, you looked at the dollar index, you're like, okay, yep, sure, it's going up. That looks great. I'll look to get long. Well, you might be mistaken, because if you come across to the daily charts, this is where you'll see the real price action. It is down, right? The hourly chart, it's identifying on this part here. Well, you know, which isn't wrong in the sense of there could be opportunities there, but overall the trend is down. You're looking for opportunities to go with the trend. So US CPI come Thursday, to me, weaker numbers, this fits in with the trend. Dollar Swiss will keep going down. Probably see a reversal in dollar yen, dollar CAD. Well, it's, as we know, it gets pulled apart from the Canadian fundamentals, oil, and the US numbers. It's a little bit trickier, but you'd expect euro to bounce. Sterling also. We've got this little break here, and the market doesn't know what to do with it yet. That's because they're waiting for these numbers to tell them whether to buy or sell, right? And the pressure's on the downside in the Aussie and Kiwi. So once again, weaker US numbers Thursday, you get a reprieve and these things bounce. So, and that's where we, you just love to have the answers every day, but we don't. Now, what answers we do have today, if you have a look through the calendar, right, there's a few things coming out which may tickle your fancy. Now, with the big event on Thursday, the idea is not to lose money into that event, right? Otherwise, by the time it gets there, all you're doing is trying to make cash back that you've already lost on a really good opportunity. So what you want to do is make the opportunity count. If you see something good in the lead up, yeah, sure, try and tuck away some cash. Now, today, there's some Japanese numbers here. I can't see a hell of a lot sort of coming out of that. In the Australian zone, well, there's some private house approvals, but building permit sort of numbers there. The NAB business confidence and Westpac business confidence numbers, these are just two banks trying to make up a number that sort of gives them credibility. In saying that, the NAB business ones are probably a little bit better, but you're looking for extreme movements to get anything out of those things. And once again, I'm not really holding my breath there. The Chinese balance of trade figures, right? These are, out of all the balance of trade numbers, probably ones to look at, because the exporting market of China is so epically massive. Any major variance here, and you can get some movement, particularly on the Aussie and Kiwi, right? And that's because China is the biggest importer of goods from those two countries. So keep an eye on that. We have seen in the past, like say they're expecting 70.6 billion here. We've seen it, like I'm talking 3 to 5 years ago. I remember this coming out and it was like, instead of plus 70 billion, it was like minus 20 billion. And everything kicked off dramatically. Now, I don't think we're in the same situation, but what I'm saying is just keep an eye on that. You got the final inflation numbers there out of Germany. Now, those numbers are usually spot on. The Germans are pretty good on their analysis. I don't see, well, these are the opportunities I can see where there's potential, but I'm telling you, my 35 years of experience, what to expect. The balance of trade figures here out of Canada, I'm not really going to be watching those. Same in the US. You go down through the list and it's just like dribble, dribble, dribble. There's not much there to be sort of really getting excited about. Okay, so don't overthink it. Don't overplan it. Don't try and trade all these events because a lot of these fundamental releases don't really impact. If there's extreme variance on some of them, yeah, sure they can. But right now, there's nothing to do. Your job is do your analysis. Okay, get your charts set up daily, hourly, work out where the trends are. Once you know where the trend is, then you can come into your hourly charts and start to really fine tune your potential entry levels, whether it's at market or around trend lines, right? Look for the opportunities. The work and the money you make later in the week comes from the work you do earlier on, right? I've gone through my charts, taking me about sort of 20 minutes, and that's pretty leisurely, right? Just sort of cruising through because I don't have to change too many trend lines because nothing's really happened. But doing this process builds consistency, it builds a habit, and by the time I get to the numbers Thursday, I'll be very confident and comfortable with where everything is. I'll know exactly what the trend is and where to get into the trades, right? That's what you got to do. All right, guys, do simple better. Good luck. Cheerio.